That was funny. How you doing, Pat? I hope you didn't mind me using your fantastic overview that you sent me and the email and page I sent out last night. Good, good. All right, so let's get going here. And yesterday the markets they made an attempt, which at the moment looks like a failed attempt to move up. And where things are at right now, we'll look at the futures. Um, I think, a coin flip. It's down enough, as you can see on this support area there, that was an obvious place for it to try and bounce. So, and it did that yesterday. And you could see it ended the day with a topping tail right there. Now, that doesn't mean it's going to go lower here, but it could. So one of the setups that often happens in a very bearish move down or a very bullish move up is where it comes down to some support, and it could happen in the middle of nowhere. That's the much more high odds one, is when the reversal happens in the middle of nowhere. There's no price support, and then it tries to stabilize, which it did. And then when it fails, that results in what I call a measured move lower, which is basically, or essentially, that's the beginning of the move. And then you continue the move about equal in length down to the next level of support. So it's a symmetrical kind of pattern that often happens. It's not based on any esoteric type of analysis. I've just seen it happen hundreds of times, if not more, over the years. And the majority of times it's just going to end in the next obvious place where you would think buyers would show up. And part of the reason why it plays out that way is because of the concept of a void. So this was a nice momentum move higher. There was a little bit of consolidation there, which was bullish price action at this resistance area. And then it continued higher. So now that prices have come down to test this area, which is pretty much in the same area as that, give or take a little bit, it's used its floor. And while it's given it, let's clean this up a little bit, while it's kind of cracked the floor here, buyers showed up. Now, you give them a day or two after that, and if they can't create enough demand to start pushing it up to where, the real selling should begin, or a real test of, bears to say, hey, this is your opportunity to, push the accelerator here, or those that were long at this area says, hey, I can get my money back here. I'll take it and see what happens. And that's why retracement patterns into areas of resistance set up good opportunities. But when a pattern, whether we're looking at the spiders or whether we were looking at any stock, forms this kind of a pattern and they can't produce some push to the upside, it opens up the door to what I said, this measured type of move. So that's what we're looking for to play out here one way or another today or tomorrow. So what we look for, right, we talked about this yesterday and maybe even the day before, where we went into like a little lesson about in multiple time frames where daily moves down like this, where we think there could be a turn, where we look at the 60-minute where it's basing out. And you can see, it's a little weak here this morning, of course, but it's still within a sideways basing process. And if this could get itself turned around higher, I would look for longs intraday for sure, if not over the next couple of days. Now, if it can't get off the mat and it starts to break here, well, then our bias is for the measured move lower. So that's the plan for today, or view for today, is if this base can result in a move up. We start looking for intraday and maybe longs for a day or two. We'll monitor that as it unfolds, of course. But if it can't get off the mat, as I said, and it starts to break lower, well, now it's pushing over the cliff into the next level. That's a great question, Alex. And I kind of struggled with that for years. Meaning, Alex is saying sometimes futures and cash indices, ETFs show different pictures. I wouldn't say they're completely different, but are different because the futures are a 24-hour chart. So when you say which one to trust, look, when I was trading equity futures every single day, and until the volatility contracted and it didn't make any sense for years, went back to stocks, and now volatility picking up again. It does make sense to look at that market as well as stocks. So I think it's best. It's still not an easy answer. Look, if I'm trading the S&P futures, I'm looking at a 24-hour chart. I'm going to know where the gap fill is. And so I'm going to trade that accordingly. And I've seen where, the day chart played out perfectly. And, the futures chart is pushed around in part by futures traders. By futures traders. So there's going to be that type of movement within it versus the S&P cash, which if it gets too far out of sync, buy and sell programs, they're going to arbitrage that and take advantage of it and push it back. And that's what futures traders, how they use buy and sell programs. But anyway, as far as we're looking at the spiders here, we just interpret that chart the way we do. And the S&Ps futures, we're going to interpret that the way we do. They're going to move pretty much the same. Some pictures are going to be different. It's sometimes going to be confusing. And what I say, it is what it is. One versus the other sometimes gives better information. And, we just have to accept that, maybe not look at the other. And, if you're trading the futures, just trade the futures. All right, so let's move along. I will get to market internals because we are close. I got to kind of lead the story along, Tony, as to, what we're looking along here, ETFs, the futures. Let's bring in some market internals. Some mornings we do a little intermarket analysis. So the cues here have been the weakest. And look at the whippy, wider ranges here where buyers are just screaming, to kind of hold this area here as it whips back and forth, but so far unable to do it. This is a nasty break. And it was looking super bullish here. But prior to the topping tails, we discount them in an uptrend. So this was moving up nicely. It made a new high. Sellers come in. We kind of expect it because of a retracement concept. And now, there's the windfall, not the windfall, just the drop, straight down like that. It's a powerful move. And when things get extreme, buyers begin to step up. So now didn't get, we're looking at the futures here, didn't get much going yesterday and weak here today. So the question becomes whether, this is just part of a choppy range prior to a move up or whether this is going to be some measured move lower. So we don't have an event here yet that's guiding us to, make a decision, a committed decision as to which way things are going to go here in the next day or two so far. Let's look at Russell, which has been extended to the downside. It is weak this morning. It's a big question. Is this part of a bottoming process? This move is so extreme in such a short amount of time that historically, it just doesn't go a lot farther. it might chop around here, but this is not, and I hope not, but I can't remember if I've ever seen such an extreme type of measured move. That would be kind of like a crash to see something like that. If this was to happen, and perhaps there would have to be some kind of news event that would just shock the market to cause a situation like that. So this is more of a scenario where it's just choppy here. It might poke under here a little bit, but I would suspect, just based on the extreme of this already move to the downside, that it would probably be some kind of a shakeout that would result in a move up. So we'll see how that unfolds. And the Dow, which has been the strongest inside day so far. It's early. Don't know what this is doing because it's just chopping around. Buyer stepped up again. Same story. Haven't been able to push it up. Let's see what's going to happen. Bonds, just continued weakness. Right? That was the story. You know, interest rates went up, and now, you know, the market sold off. Well, you know, so this is bond prices, which means just turn it upside down, and that's what you have for interest rates. They were going down for a month, and the market yawned at it. Now it accelerated lower where it would seem we got a mini climactic move, and the market woke up to this. Not on this day. On this day, this is where it sold off. So we'll see what it does here, but this is the next support level. Oil is chopping around after a breakout failure. It's in an uptrend. It looks good to be able to go higher. So this kind of a pattern is one in which just stay away from it for right now. Let it chop around. Uncertainty here. Let's see what it's going to do. You got a breakout failure fighting against a bottoming tail here. So buyers and sellers will battle it out and see which way it might go, but the trend is up. Gold is just the unloved stepchild. It's been trending down. It got climactic, and you know, it's been going sideways, which leads me to believe that if it doesn't get off the mat here real soon, it's going to make another move to the downside. Okay. And Dan will go through whatever's gapping and moving here, just glancing across what I have, and the internals, which we'll take a look at here in a second. I'm just looking at these stocks here. And so there's the internals. And we're getting close here, guys. We're just touching into the bullish area here. You know, we came down to the minus 200 area on breath. Again, this is the day-to-day movement of the put-call ratio. So ideally, if you ask me what would be ideal as far as the internals go, I would love to see the market do this, maybe today. At the close, these option traders would be loaded to the eyeballs with puts. This moving average would be somewhere down here. And then we would just look for even this kind of a pattern in this location to get long this market. And so we're wait and see today for a while anyway to see which way things go, and then we'll update accordingly. All righty, Dan, all yours, buddy.
All right. Good morning, everyone. And, you know, we had a long talk into the close yesterday and after the close. Yeah. Hey, Alex, everyone. About, you know, the price action. I said I didn't like. You know, I'm not going to regurgitate it all, but we were supporting the sidelines and waiting for more clarity. And as you just heard from Greg, we still don't have that. But we know what to look for to give us that confidence. So that's where we're at. And so we don't have that many open positions now because of that. Mike Juliet, we have a put spread. It's gapping up. That's the marijuana sector, so that looks good. NSC put spread, and it's that 180. So tick-tock on Friday expiration, we'll manage it accordingly. We actually legged into an Iron Condor yesterday with the weakness here. We shorted the 185, 187.5. So now we got a Condor on our hands. What else? Intel, we have just a 1/3 position. So that's small. We're watching that to add to it. Now I'll just look at a bunch of miscellaneous things. Mo, I never triggered because of the excessive move in the first 5 minutes. IWM, we have this put spread that expires Friday. So that's, you know, so yeah, Greg, I mean, it's a tough call here. I heard every word you said. Hey, it's like, you know, it might get stopped out and then it's a shakeout and we stop out at the low. But what do you do if you're in it? Do you just take your stop and wait for a new setup? Do you give it a 30-minute low so you don't get stopped out at the low? CCJ, I've been watching the monthly on this.
Well, Dan, you asked a very key question there, you know, which probably many are wondering.